Welcome to our deep dive today. We're
Yeah.
going to be looking at Japanese candlestick charting.
Yeah, very cool
We're
stuff.
going kind of beyond the basics today.
Right.
And using a book as our guide called Japanese Candlestick Charting Techniques by Steve Nison.
Mm-hmm.
Really trying to uncover how this whole technique evolved.
Yeah.
How it's different from the Western methods of charting.
Mm-hmm.
And most importantly, what it can tell us about
Yeah.
market psychology.
Yeah. It's really fascinating how candlestick charting,
Mm-hmm.
it's a practice that was born centuries ago
Right.
in these really bustling rice markets of Japan,
Yeah.
still holds so much relevance in our modern,
Mm.
digitized financial world.
Yeah. I'm really curious about the origins.
Yeah.
I know it was developed by this rice trader named Munehisa Homa,
Mm-hmm.
but what specifically about his approach set him apart
Yeah.
and led him to create this unique system?
Well, Homa wasn't just a trader. He was like a master observer, really recognized that price fluctuations weren't random. They were driven by, human emotions, and particularly, fear and greed.
Yeah.
And so he meticulously studied these emotional patterns
Mm-hmm.
and kind of translated them into this visual language of candlesticks.
Right.
Each one is really like a snapshot of this battle
Yeah.
between buyers and sellers.
So he saw these recurring patterns in human behavior
Yeah,
and codified them
Yeah.
into a visual system.
right.
That's pretty remarkable.
Mm-hmm.
But why candlesticks specifically?
Yeah.
What makes them, I guess, more effective of a tool than
Sure.
traditional Western bar charts?
I think, if you think about it, both charts use the same data,
Hmm.
open, high, low, and close.
Right.
But candlestick charts with their colored bodies
Mhm.
and wicks, they kind of bring that data to life.
Mm-hmm.
They paint a very vivid picture of the price action,
Yeah.
making it much easier to spot trends and reversals.
Yeah, you're right. The visual aspect is striking. So we have these very elegantly designed candlesticks
Right.
revealing all these emotional undercurrents of the market.
Yeah.
But how did this knowledge that was tucked away in Japan for centuries
Right.
eventually make its way to the West?
It took a while, actually.
Yeah.
It wasn't until the late 20th century
Mm-hmm.
that Steve Nison,
Mhm.
who was a financial analyst,
Mm-hmm.
stumbled upon this kind of hidden gem.
Yeah.
He was working for a major brokerage firm at the time
Okay.
and saw the potential of this technique for analyzing Western markets.
And his book was kind of a game changer, right? Japanese Candlestick Charting Techniques
Uh-huh.
introduced this entire concept to a whole new audience.
Yeah, it was like opening a window into this hidden world.
Yeah.
Nison's work really made candlestick charting
Mhm.
accessible to Western traders,
Right.
and its popularity just exploded.
Mm.
It proved that even though, markets evolve,
Right.
human psychology remains a constant.
It's pretty amazing to think that traders today
Yeah.
are using a system developed centuries ago for trading rice
Right.
to analyze stocks, currencies,
Yeah.
and cryptocurrencies.
Mhm.
So are you saying that these ancient patterns are still relevant
Absolutely.
in our modern high-speed trading environments?
I think while the tools and technologies have changed,
Mhm.
the underlying drivers of market psychology haven't.
Right.
Fear and greed are timeless,
Yeah.
and the way that they manifest in price patterns
Mhm.
can still be identified through candlestick charting.
Okay, that makes sense.
Yeah.
So let's get into some specifics.
Right.
I'm ready to learn how to decode these candle whispers, as you've called them.
Okay, sure.
What are some key patterns that every trader,
Mm-hmm.
even a novice,
Right.
should be able to recognize?
Well, let's start with the doji.
Yep.
Often described as a moment of indecision in the market,
Mm-hmm.
characterized by a very small body,
Right.
or even no body at all,
Yeah.
indicating that the opening and closing prices were virtually the same.
So it's like a pause,
Yeah.
a moment of equilibrium between the bulls and the bears.
Mm-hmm.
Does the doji tell us anything about the future direction of price?
It can be a powerful signal,
Okay.
often appearing at turning points,
Right.
especially when it forms after a prolonged uptrend or downtrend.
Mm-hmm.
However, it's really important to remember
Okay.
that no pattern exists in a vacuum.
Right.
We need to consider the context,
Mhm.
the preceding price action,
Yeah.
and other supporting indicators
Right.
before jumping to conclusions.
Context is key.
Yes.
So a doji on its own isn't enough to make a trading decision,
Right.
but it can alert us to a potential shift in momentum.
Mm-hmm.
Let's move on to another basic pattern.
Okay.
The hammer.
Yeah.
I've heard a lot about this one.
The hammer is a fascinating pattern, both visually and psychologically.
Okay.
Imagine this. The price dips sharply during the trading session,
Mm-hmm.
but then buyers step in aggressively,
Right.
pushing it back up to close near the opening price.
Mm-hmm.
This action creates a candlestick with a small body at the top
Right.
and a long lower wick, resembling a hammer striking the bottom of the market.
That's a powerful image.
Yeah.
Really conveys the idea of buyers rejecting those lower prices.
Right.
But is this pattern always reliable?
No pattern is foolproof,
Right.
but the hammer becomes more reliable when it forms after a downtrend, near a support level,
Okay.
and with increasing volume.
Right.
These factors suggest a genuine shift in sentiment,
Mm-hmm.
with buyers overcoming that selling pressure.
That makes sense.
Yeah.
So the context in which the pattern appears is crucial
Right.
in determining its validity.
Mm-hmm.
Now, I'm curious about this inverted hammer.
Okay.
Is it simply a hammer flipped upside down?
Visually, yes,
Right.
but the story it tells is slightly different.
Okay. I'm intrigued. How so?
In this case, buyers push the price higher during the trading session, but sellers emerge to push it back down before the close.
Okay.
The resulting candlestick has a small body at the bottom
Right.
and a long upper wick.
So it seems like a bearish signal, but you're suggesting it's actually bullish.
Right.
Why is that?
I think the key lies in the fact that the price didn't collapse.
Mm-hmm.
It means the sellers weren't strong enough
Right.
to drive it significantly lower.
Right.
The inverted hammer, especially when it appears after a downtrend,
Okay.
can be a sign that buying pressure is building
Mm-hmm.
and a potential upward reversal is brewing.
So both the hammer and the inverted hammer,
Right.
though visually different, can be interpreted as bullish signals, depending on the context in which they appear.
Precisely.
Right.
They highlight situations where buyers showed resilience.
Yeah.
And that's something to pay attention to.
This is fascinating stuff.
Yeah.
We've already covered so much. The origins of candlesticks,
Yeah.
the psychology behind them, and even a couple of key patterns to watch out for.
Right.
But before we move on to more complex patterns,
Okay.
let's pause for a moment and consider this. If Mhisahoma were transported to our modern markets,
Yeah.
what aspects of our trading world do you think would surprise him the most?
Yeah.
And what timeless principles from his candlestick wisdom do you think would still hold true?
That's a great question to ponder. We'll delve deeper into more candlestick patterns in part 2.
Okay, sounds good. Welcome back to our deep dive into Japanese candlestick charting.
Yeah.
In part 1, we kind of explored this fascinating history and psychology behind this ancient technique.
Yeah.
And we even decoded a couple of basic single candlestick patterns.
Right. And now we're ready to level up our candlestick knowledge, moving beyond individual candles to explore patterns that involve multiple candlesticks working together.
Okay.
These multi-candlestick formations often provide even stronger signals about potential shifts in market direction.
I'm excited to dive into these more complex patterns.
Yeah.
Where should we start?
Let's begin with the engulfing pattern.
Okay.
A powerful 2-candlestick formation that often signals a potential reversal
Right.
in the prevailing trend. As with many candlestick patterns, the engulfing pattern comes in 2 flavors: bullish and bearish.
Okay, so let's break down the bullish engulfing pattern first.
Okay.
What does it look like?
Sure.
And what does it tell us?
So picture this.
Okay.
You see a small black candlestick, indicating that sellers were in control during that period, pushing the price down.
Okay.
However, the next candlestick has a completely different story.
Okay.
It's a large white candlestick that completely engulfs the body of the previous black candlestick.
So the white candle's high is higher than the black candle's high, and its low is lower than the black candle's low.
Exactly. The white candle completely envelops the black candle, signaling a decisive shift in power from sellers to buyers.
Okay.
This engulfing action is a visual representation of buyers,
Right.
overwhelming the previous selling pressure, suggesting a potential reversal to the upside.
So it's like a sudden surge of buying power,
Yeah.
erasing the previous losses and potentially signaling the start of an uptrend.
That's a great way to visualize it.
Yeah.
Now, as you might have guessed,
Right.
the bearish engulfing pattern is the mirror image of its bullish counterpart.
Let's see if I've got this right.
Okay.
In a bearish engulfing pattern, we'd see a small white candle
Right.
followed by a large black candle that completely engulfs the white candle's body, right?
Precisely. This pattern suggests that buying pressure is waning.
Okay.
And sellers are seizing control,
Hmm.
potentially signaling the start of a downtrend.
So these engulfing patterns seem pretty straightforward
Yeah.
in terms of their visual appearance
Right.
and interpretation.
Mhm.
But are they always reliable indicators of a trend reversal?
As with any technical analysis tool,
Right.
it's crucial to consider the context.
Mm.
While engulfing patterns can be strong signals, they are not foolproof.
Right.
We want to look for confirmation from other indicators,
Okay.
such as volume or the overall market trend,
Hmm.
before placing too much weight on them.
That makes sense. Confirmation is always key in trading.
Yeah.
So we have the engulfing pattern,
Right.
a two-candlestick formation.
Mm-hmm.
Are there any important multi-candlestick patterns
Absolutely.
that involve three candles?
Let's explore the captivating world
Okay.
of the morning star and evening star patterns.
Okay.
These three candlestick formations are known for their dramatic names
Right.
and their ability to signal potential turning points in the market.
I love the imagery of those names. It's like we're looking to the stars for guidance
Yeah.
in our trading journey.
Right.
So let's start with the morning star.
Okay.
What makes this pattern so special?
The morning star typically appears after a downtrend.
Okay. And suggests a potential reversal to the upside.
Mm-hmm.
It starts with a long black candlestick,
Right.
continuing the downward momentum.
Okay.
The second candlestick is a small-bodied candlestick, either black or white,
Mm-hmm.
that gaps down from the first candle.
Yeah.
This small candle signals indecision
Right.
and a potential shift in momentum.
It's like a pause, a moment of uncertainty
Yeah,
before the tide begins to turn.
exactly. And then comes the crucial third candlestick.
Okay.
It's a long white candlestick that gaps up and closes well into the body of the first black candlestick.
Okay.
This powerful move upwards is what gives the pattern its name,
Right.
evoking the image of a bright star rising in the east after a long night.
So it's a signal of renewed buying pressure,
Right.
overcoming the previous selling momentum
Mm-hmm.
and potentially marking the beginning of an uptrend.
That's the idea.
Mm-hmm.
Now, the evening star
Yeah.
is essentially the bearish counterpart of the morning star
So it would appear after an uptrend. Yeah.
and signal a potential reversal to the downside.
Yes. It's like a mirror image of the morning star, starting with a long white candlestick,
Right.
followed by a small indecisive candlestick that gaps up,
Mm-hmm.
and finally a long black candlestick
Okay.
that gaps down and closes well into the body of the first white candlestick.
Right.
This pattern suggests that buying pressure is fading
Mm-hmm.
and sellers are taking charge.
These multi-candlestick patterns are truly fascinating.
Yeah.
They're not just about memorizing shapes,
Right.
but about understanding the underlying psychology of the market,
Mm-hmm.
this constant battle between buyers and sellers.
Precisely, each pattern tells a story, revealing the shifting sentiment
Yeah.
and potential for future price movements.
Yeah.
But it's crucial to remember that candlestick patterns
Right.
are just one piece of the puzzle.
Mm.
They should be used in conjunction with other forms of analysis,
Yeah.
like trend identification,
Mm-hmm.
volume confirmation,
Right.
and other technical indicators.
It's about using all the tools at our disposal to build a comprehensive view of the market.
Exactly.
But before we move on to part 3
Okay.
and explore how to apply these patterns in real-world trading,
Right.
I'd like to ask our listener a question.
Sure.
Which of these multi-candlestick patterns resonates with you the most?
Mm-hmm.
Which one sparks your curiosity and makes you want to learn more?
Hold that thought, because in part 3, we'll go beyond pattern identification
Okay.
and delve into the practical application of candlestick charting
Right.
in our modern markets.
Welcome back to the final part of our deep dive into Japanese candlestick charting.
Yeah.
So far, we've kind of journeyed through the origins of this technique,
Yeah.
explored its psychological underpinnings,
Right.
and decoded a variety of patterns, from single candlestick formations
Mm-hmm.
to the more complex multi-candlestick patterns.
Yeah, we've covered a lot of ground.
Yeah.
But the real power of candlestick charting
Mm-hmm.
lies not in simply recognizing patterns, but in understanding how to apply them in your trading.
Exactly. I'm eager to move beyond theory and into practice.
Here.
How can we use this knowledge to make more informed trading decisions
Right.
in today's markets?
Well, the first thing to remember is that candlestick patterns are not crystal balls.
Right.
They don't predict the future with absolute certainty.
Yeah.
Instead, they offer valuable clues,
Mm-hmm.
hints about potential shifts in market sentiment
Yeah.
that can help you make more informed decisions.
So it's not as simple as seeing a hammer pattern
Right.
and immediately hitting the buy button.
Not quite. Just like a detective wouldn't make an arrest based on a single fingerprint. You wouldn't base a trading decision solely on a candlestick pattern.
Mm-hmm.
You need to consider the broader context,
Right.
corroborating the signals with other forms of analysis.
Okay, that makes sense.
Yeah.
What are some of the key factors we should be considering
Sure.
when evaluating candlestick patterns?
One of the most important factors is the overall trend. Is the market in an uptrend, a downtrend, or is it ranging sideways?
Right.
Candlestick patterns tend to be more reliable
Mm-hmm.
when they confirm the existing trend
Okay.
or signal a potential reversal at key support or resistance levels.
So if we see a bullish pattern in an uptrend,
Right.
it carries more weight than the same pattern appearing in a downtrend.
Precisely. The trend acts as a sort of filter,
Mm-hmm.
helping us to separate the wheat from the chaff.
Right.
In terms of signal reliability, another crucial factor is volume.
Okay.
Does the volume confirm the pattern?
Right.
A strong move with increasing volume
Mm-hmm.
is generally more convincing than a move with weak volume.
Yeah, it's like volume acts as a measure of conviction,
Mm-hmm.
showing us how much force is behind the price movement.
It's a great analogy. Volume can tell us whether a move is likely to be sustained or
Uh-huh.
whether it's just a temporary blip.
So we have trend and volume.
Right.
What other tools or techniques can we use
Yeah.
to enhance our candlestick analysis?
This is where things get really interesting.
Okay.
You can combine candlestick patterns
Mm-hmm.
with other technical indicators to create a more robust and comprehensive trading system.
It's about layering different pieces of evidence,
Right.
building a stronger case for a potential trade.
Exactly. You can use moving averages
Okay.
to identify trend direction and strength oscillators,
Wow.
to gauge momentum and overbought or oversold conditions,
Right?
and even Fibonacci retracement levels to identify potential support and resistance zones.
So candlestick patterns become even more powerful
Right.
when they align with other technical indicators
Yeah.
pointing in the same direction.
That's the beauty of technical analysis.
Yeah.
It's not about finding the one magic indicator,
Mm-hmm.
but about using multiple tools in harmony
Right.
to gain a deeper understanding of market dynamics.
Yeah, I'm starting to see how candlestick charting can be a valuable tool
Mm-hmm.
in the hands of a skilled trader, not as a standalone system,
Right.
but as part of a holistic approach to market analysis.
It's a process.
Yeah.
Remember, trading is a journey, not a destination.
Mm-hmm.
It's about continuous learning, adapting, and refining your skills.
This deep dive into Japanese candlestick charting have been enlightening.
Yeah, it's been fun.
We've uncovered the history, psychology, and practical application
Mm-hmm.
of this fascinating technique, tracing its journey from the ancient rice markets of Japan
Yeah.
to the modern digital exchanges of today.
And as we conclude this exploration, I encourage you, our listener, to consider this.
Mm-hmm.
How can you incorporate the lessons of candlestick charting into your own trading journey?
Right.
How can you use these visual cues to gain an edge in the market, not by predicting the future, but by understanding the language of price action
Right.
and the underlying emotions that drive it?
It's been a pleasure guiding you through this deep dive.
Likewise.
Happy charting.